Hello, good evening everyone, and welcome to this session on pivot points. Pivot points is a very popular indicator, mostly used for day trading, and I tend to use a lot for my day trades. So that's what we'll be discussing today, pivot points, what they are, how you can calculate them, and how you can use them in your day trading. So what are pivot points? Pivot point is a technical indicator that is commonly used in day trading. You don't use it in swing trading. You don't use it in positional trading. You only use it for day trading. And you'll soon find out why, because it only lasts for 24 hours. So it's a technical indicator that is commonly used in day trading. It is used by floor traders to determine price support and resistance levels. And as we know, floor traders tend to do huge volumes of trades, and they tend to look for the price support levels and also price resistance levels to give them opportunities where they should take positions in the market. And because it's commonly used by floor traders and who do a huge volume, it tends to become a self-fulfilling prophecy, so to speak. And that's also why they're popular. So usually as a day trader, the pivot point is one of the first places you look at to enter a trade. So before you start your trading day, once you've done all your checks and all your analysis of the market, when you want to now place a trade, you're looking at where the market is in relation to the pivot point. So as a day trader, the pivot point is one of the first places you look at to enter a trade. Now, just like in the English definition, a pivot point is the price at which the direction of the price movement changes. So that's why it's called the pivot point. It's just at the point at which, the direction of the price can change. It can either go up or go down. So that pivot point is that line or that point where the market can either go up or down. So a pivot point is a price at which the direction of the price movement changes. So how do you use the pivot points? Now, when you're using the pivot points, you first determine whether to go long or short, and you set your price objectives and stops when price reaches the pivot points. Obviously, going long means you buy. So when the market is going up, you're looking to buy or you're looking to go long. And when the market is falling, you're looking to sell or go short. So you determine whether you're going to go long, that means you're going to buy, or go short to sell. And then obviously you need to set your price objectives and your stops, once the price reaches the pivot point, which is where your money management comes in. So in general, if the prices of the market are above the pivot point, the market is considered bullish or going up. And if it's below the pivot point, is considered bearish or the market is going down. So again, I'll just repeat. If you look at the pivot points and the market is above the pivot point, then the market is considered to be, bullish if it's above the pivot point, and it's considered to be going up and bullish. But if it's below the pivot point, it's considered to be bearish, and that means the market is possibly going down. So again, that's why it's important to determine where the pivot point is in the markets before you trade. And also the support and resistance levels of the pivot points are used as profit targets also when you're trading with the pivot points. Basically, the pivot point is traded or used in conjunction with the support and resistance principle. And I'll just explain that, because using the market support and resistance principle, which is what the pivot points are based on, you then find that that is how you use the pivot point. So what is the market support and the market resistance principle? I'll just explain that to you. I'll just use this diagram here. It's just a diagram to illustrate what I mean. And it's very easy to remember this if you can just picture the picture of you being in a room. So that's why I've got, this figure of a person here standing up. So you've got this figure of a person standing up with their hands up, and that's their legs. So just standing up, raising their hands up. So if you just picture you, that's you in the room. So if you're in the room, whatever is below you is your support. Obviously supporting you as you stand. And whatever is above you is a resistance, preventing you from going through the roof. And that's the simple way you need to think about support and resistance. So whatever is below you is supporting you, and whatever is above you is a resistance to you. And it's always important to remember that. So in this example here, you can see this is the pivot point called P. So this line here is the pivot point. So it means that at this point, with this guy standing here, then the pivot point is acting as a support to him. And the first resistance, which is above him, because it's above him, is called a resistance, or R1. Now, if you picture it again as you being in the room, so if you jump up and down, you expect the floor to support you. But if the floor is weak and you keep jumping up and down, you can crash through the floor and then you head for the second floor. Same with this, with the resistance. If you're jumping up and down, you hit your head on the roof and fall back down. Alternatively, if the roof is weak, you can crash through the roof and head for the second roof. And obviously, if you think about that, that obviously creates a trading opportunity for you, because you can then have a sell order below the market support, saying that if the market breaks the support, you want to sell, because you know the market would tend to fall if it breaks the support. And then just as with the resistance, you know that you can have a buy order just above the resistance, a pending buy order waiting for the market to break the resistance. And then if it then breaks the resistance, you buy, because you know there's a chance it will go up. And the pivot points work on that principle. And as we're going to talk about shortly, when you calculate the pivot points, you have the pivot point called P, the first resistance called R1, the second resistance called R2, and then obviously you've got the first support, S1, and the second support, S2. And I'm going to talk to you how to calculate it shortly. And then that's just what you do using the pivot points, is when you look at the market. So now we'll just replace this individual here and just now replace that with the market. So if the market is here, where this picture is of the individual, then the pivot point is acting as a support to the market, and the first resistance here is acting as a resistance to the market. And then if you see that, you can then have a pending buy order just above the first resistance. Like I said, I'm going to show you how to calculate the figure there. And you can have a pending sell order just below the pivot point. And like I said, I'll show you how to calculate those points. Alternatively, if you have, the chart, if you now have him below here, so I've just moved it. So you can now see a support can become a resistance, and a resistance can become a support. So you can see now that I've moved him to below the pivot point, you can see the pivot point is now above him. So the pivot point now becomes a resistance, and then the first support now becomes a support. So again, if the market falls, you can sell below the first support. If it goes up, you can buy above the pivot point. And again, if I put him down here to the bottom, now you can see the first support is now above him. So this now becomes a resistance, and then the second support is a support. So again, if the market goes up, you can buy above the first support here because it's now acting as a resistance. Technically, you can sell below the second support, but you don't use it to trade, because when the market gets to the second support, it tends to trend sideways or go back up. So you try and avoid using the second support to trade, same as the second resistance, you try and avoid using that to trade. So basically, you just use the first resistance, the pivot point, and the first support to trade using the pivot point strategy. Okay? So that's how you sort of use the pivot point strategy. Okay, so it's just you using that principle of the market support and resistance levels. And like I say, I'm just going to show you now how to calculate those figures, and I've just shown you how to use them. Okay, so this is just a chart showing you in real chart on a chart how it's done. So you can see this black line here, this black broken line here is a pivot point. This green line here is the first support, and this is the second support. So you can see as the market was falling, at this point the market was above the pivot point, so it was below the market, so the market acted as a support. So you could have sold there, that could have been your entry point to sell just below the pivot point. So you can see when it broke the pivot point, it fell. Or if you missed selling at the pivot point there, you could also sell just below the first support. Again, you can see where it broke the first support and fell. And again, you can see this is what usually happens. By the time it got to the second support, it starts trending sideways, and that's why you avoid trading using the second support or the second resistance. So how do we calculate this pivot points that we have on the chart? So to calculate the pivot points are calculated using price data from the previous trading day. So always remember that, it's sort of a lagging thing. So the pivot points are calculated using the price data from the previous trading day. Now the pivot point, the support, and the resistance levels are calculated using the high or the highest price from the previous trading day, the lowest price from the previous trading day, and the close price from the previous trading day. So it's very important. It's the previous trading day's parameters you use to calculate the current day's pivot points and resistance and support levels. Now, there are many variations to calculating the pivot points and its related support and resistance levels, but the most widely and the most commonly used one is the traditional calculation. And the traditional calculation for the pivot point and the support and resistance level are, so to calculate the pivot point, or P, you would then add the highest price from the previous day's trading, plus the lowest price from the previous day's trading, plus the closing price from the previous day's trading, divided by 3, and that will give you the pivot point. Now, the first support, or S1, is 2 times the pivot point figure just calculated minus highest price from previous trading day. The first resistance, or R1, is 2 times the pivot point minus the lowest price from the previous trading day. The second support, or S2, is the pivot point minus the highest price minus the lowest price from the previous trading day will give you the second support, or S2. And the second resistance, or R2, is the pivot point plus the highest price from the previous trading day minus the lowest price from the previous trading day will give you the second resistance, or R2. So this is how you calculate the pivot point and the support and resistance levels, and then apply it on your charts, and then you can then use it to trade. So I'll just show you a real-life example of how you calculate this. If you're lucky, some platforms have this done automatically. It automatically calculates the pivot points from you. If you're very good with softwares, you can create a software that can help you calculate it. But I use a spreadsheet to help me calculate the pivot points, and I'll just show you an example of what I mean. So I'll just bring the charts up. I'll just bring the chart up for Euro US dollar. Let's look for that. If you're new to trading, the best market to trade is the Euro US dollar, because that's one of the most widely traded currency pairs, and that's the one I'll be using now just to show you as an example of how to calculate the pivot points. Okay, so let's have a look at the charts. So this is, let me just bring up the Euro US dollar. So this is the Euro US dollar, which has been going zigzag all day. So usually when I want to calculate the pivot points, I just go to the daily time frame. So you can see when I go to the daily time frame, or D1, each of these candlesticks here represent a whole day. So going to D1, each candlestick represents a whole day. So for today, which is, let me just check. Today is the 24th of June. So if I was going to calculate my pivot points this morning, the morning of the 24th of June, I will go to the previous day, which is the previous candlestick, which is the 23rd. And if you look at the left of my screen, or the left of my screen here where my cursor is, I've got the data window. So under the data window, wherever I place my cursor on the chart, it will show me the high, low, and closing price. So I'll put my cursor again on the candlestick from yesterday, the 23rd, and then you'll be able to look at this data window, the date, and you can see it's a daily time frame. So you've got the date, and it'll give me the highest price from yesterday, the lowest price from yesterday, and the closing price. So I'll just take my cursor back to the candlestick from yesterday. If you look back at the data window, you can see the 23rd, which is yesterday, and you can see the high from yesterday is 1.3613. The lowest price is 1.3574, and the closing price is 1.3604. So I've now got the high, the low, and the closing price from the previous day. So now I'll just apply it to the spreadsheet. Let me just bring the spreadsheet up. And if you want a copy of this spreadsheet, you can email me at info@dkbMARKETS.com, and I can send you a copy of the spreadsheet. So looking at the spreadsheet, I'll just remove the one here for Euro US dollar. So you can see I'll just insert the figures there, the high, the low, and close. So the high, like I said, was 1.3613. That was the highest price. The lowest price was 1.3574, 1.3574, and the closing price was 1.3604, 3604. And once you put the high, low, and closing price, you see you've got the R2, R1, pivot, S1, S2 calculated for me. So it's all there. And all I just have to do is just apply those lines to my chart, which is what I did this morning. So I'll just go back to the charts. I use the 5-minute time frame for my day trading. So I'll just make this a bit smaller. So you can see, looking at my 5-minute time frame, I've now got those pivot point figures I've calculated on there, and you can see them there. So the red lines are my resistance. So those are the figures I calculated. The yellow line is the pivot point, and the green lines here, the first support and second support. And then, like I said, it's just looking at where the market is in relation to the pivot point and trading that way. If I just give you an example, but because obviously the market is closed now. So let's just assume this was early in the morning and you saw the market sideways. Obviously, you won't use the pivot point because it's within the sideways trend. But you can see the R1 is there, so you can see if the market goes above R1, you want to buy if it breaks the first resistance. And since we, excuse me, since we know the first resistance is 1.3620, we can place an order just above 1.3620. So we now know at what level to place our pending order. So we can place a buy stop. Since the order is 1.3620, you can say, okay, I'll buy at 1.3623. So if the market gets to 1.3623, I want to buy. And then you can say, I'll sell just below the first support if the market falls and breaks the first support, so I can sell at 1.3580. That's how you can use the pivot point strategies. And the beauty about the pivot point strategy is the fact that these lines are fixed. It's not a moving target. So once you calculate, you can calculate them from midnight. And you can start using them from midnight. And once you've calculated the pivot points, the lines there are fixed. They don't change. So it's a fixed point or fixed point of reference in the market that you can use to trade any time of the day. And because of that point, you can tend to have pending orders and then leave your trades, apply your stop loss and profit targets, and then you don't have to sit there watching the market all day. Okay, so that's how to use the pivot points. That's how to calculate the pivot points and apply it to your chart. And you can see it's a very good indicator, and like I said, especially for day trading. Okay, so that's it really on pivot points and how to use it. Like I said, if you want a copy of the spreadsheet, you can email me at info@dkbmarkets.com for that. Okay, any questions? If you have any questions, do click the hand button or send your questions to the question box.